Welcome back to the channel. Today was an exciting day on Wall Street, and we're here to give you all the details on why the stock market surged. The Dow jumped a whopping 400 points, the S&P 500 rose by 1.23%, and the Nasdaq climbed by 1.43%. But it's not just about the numbers. Today's rally was fueled by the upcoming presidential election and the anticipation of some big changes. So why should the average person care about a market rally on election day? Let's dive in. So the stock market was a bit like that friend who gets really excited before a big event. In this case, the US presidential election. Traders were waiting eagerly for any sign of what might come next. We saw the Dow Jones rally by over 400 points. The S&P 500 closed solidly up, and the Nasdaq wasn't far behind with a strong 1.43% gain. Exactly. It was like Wall Street was saying, bring on the election. But it's more than just numbers rising and falling. It's about the implications. A win by either candidate could bring changes in policies on taxes, regulations, and even tariffs. Now, with the tight race between former President Donald Trump and Vice President Kamala Harris, the stakes are high. Who wins could determine where we end the year financially. Traders were a bit on edge, but there was optimism too. Right, Ryan Dietrich, a chief market strategist at Carson Group, put it this way: whoever wins is going to inherit an economy in pretty decent shape. So investors are hoping some of the current drama, if you will, might ease post-election. But don't get too comfortable. History suggests that stocks often fall immediately after election day, even if they rise in the long run. So buckle up for a potentially bumpy ride. While we're talking about uncertainty, let's bring in the Federal Reserve. The Fed has a meeting this Thursday, and traders are expecting another rate cut. Imagine this. It's like giving the economy a bit more gas as it's rolling down the hill. That's a good way to put it. Lower interest rates make borrowing easier. For the average person, this can mean lower mortgage rates and cheaper car loans. But remember, rate cuts can also mean more money circulating, which can sometimes boost inflation. It's a double-edged sword. Think of it like a caffeine boost. It gives you a jolt of energy, but overdo it, and you might get the jitters. The Fed is walking a fine line between stimulating the economy and preventing it from overheating. Today's rally was broad, meaning it wasn't just a few sectors. Over 80% of stocks in the S&P 500 were up. Companies like Nvidia saw big gains, with their stock jumping nearly 3%, and even banks saw some green as traders speculated on potential deregulation. That's right. The excitement isn't just about tech and banks, it's across the board. Consumer staples, which includes companies like Coca-Cola and General Mills, are seeing a bump. They're considered safe havens in uncertain times. So if a market correction happens, people tend to flock to these safe stocks. And then there's Cathie Wood's ARK Innovation ETF, which has dropped significantly since 2021. But for today, let's give it a pass. It's election day and everyone deserves a little optimism, right? So why does this all matter to you? If you have a 401k or any investments, these swings can impact your returns. Today's rally might give portfolios a little boost, but what happens next depends heavily on the election and the Fed's rate decisions. Exactly. If you're thinking of buying a house or car, or even just trying to save, interest rate cuts could work in your favor by lowering borrowing costs. But there's a trade-off. If inflation starts to rise, your dollar won't stretch as far. And hey, if you're into crypto, this election could be a wild card. Bitcoin surged past $70,000 today. A potential Trump win might be good news for crypto, as he's seen as more pro-crypto, while Harris is seen as cautious. Here's where a bit of critical thinking comes in. A big rally is exciting, but it doesn't necessarily mean smooth sailing ahead. There's a lot of hedging going on, meaning traders are preparing for possible volatility after the election. That's right. Today's gains could just be a knee-jerk reaction. If the election results aren't clear right away, we might see some turbulence in the days to come. So it's wise to keep a long-term perspective instead of getting swept up in the excitement. Think of the market as that one friend who's a bit of a thrill seeker. Fun to be around, but maybe don't follow them into every roller coaster ride. Diversification, patience, and keeping your eye on the horizon are essential. All right, so where do we go from here? I'd say it's like waiting for the election results. You want to look, but you're also a little afraid. Remember, regardless of who wins, your financial goals stay the same. And hey, if today's rally gave your retirement fund a nice little bump, maybe treat yourself to an extra coffee tomorrow. Just don't expect it to last forever. In the meantime, stay tuned, stay informed, and keep a sense of humor, because with Wall Street, you'll need it. Thanks for watching. Be sure to subscribe for more updates and let us know in the comments. Are you team long-term hold or ride the election roller coaster? Until next time.